And this is one thing that I always tell people, like today I made 5 grand. One thing that I always tell everybody that, look, if you blew up on a day when the market is super choppy, like yesterday the market was super choppy, if you blew up your trading account on a choppy day, guess what? You're never having the best trading day ever, right? You never, I mean, you're going to be out of the business. So it's super freaking important to just know when to call it a day when things are not working for you and just be like, man, I can come back, always come back tomorrow, right? And that was one of the lessons that I learned back in the day, where it's just not worth it to keep pushing and keep trying on the days when things are not working for you. So let me share my screen. Let's do this, yo. All right. So let's break down. I made 5 grand, and the first initial trades. So I was kind of taking it easy. This would have been easy 10, 15,000 all day if this was kind of in the middle of the month. But because it was the starting of the month, and I used this, and I'm sure I've broken this down so many times, but I use this thing called bell curve. So based on the bell curve, like think about it. Every single month has 4 weeks. Okay. Every single month has 4 weeks. Every single trading day, every single trading week has 5 days. All right. Every single year has 3 quarters. All right. 4 quarters. So first 3 months, then next 3 months, 4 quarters, and every single quarter has 3 months. All right. And so what I do is as soon as the first trading day of the week starts, I'm kind of slow, taking it easy. So I look for confluences here when I'm super taking it easy. What's the confluences? Like we were starting, kind of starting a new month. So kind of starting a new month, starting a new quarter, right? So there's confluence. That means the days when we have more confluence. Confluence just simply means when there's more than one thing sitting at the same price point in trading world. But in this is my structure to kind of play with my position sizes, right? So start of the month, start of the quarter, I'm taking it easy. And then I'm like, as the day goes by, I'm picking up the size. Same goes for my trading day. First trade of the day, super small size. Let's say if the first trade of the day is red, what happens? Next trade, either the same position size as the first one, which is small, or it kind of drops. All right. That way, when you're actually not in the zone, so for some days when you're just not in the zone, things are not working, first trade you take, next trade is either the same position size or a little bit less. You can't blow up. Third trade you take, a little bit less. Let's say all 3 trades didn't work, and that's my rule. If 3 losses in a row, I call it a day. I don't even try with the fourth one. I know for a fact if I can't, bro, if I can't see the market within first 3 trades that I've taken, like, because I don't take trades which are low quality setups. I only take A plus setups. So if my A plus setups are not working, man, on 3 trades, oh my God, that's not my day. Let me just call it a day. Does it make sense? How many times it has happened to you in the past where you have taken a trade, things didn't work, and the next trade you put a little bit more position size just to try to recover from that trade, and that didn't work, and now you're big time down on the day, and now you're just chasing your own tail, and you blow up. And then imagine somebody blowing up on Monday and today is Tuesday. Guess what? Today was a beautiful trading day. It was nice trend. All right. So that's called bell curve. That means based on a bell curve. That's why I only made 5 grand and not 10, 20, 30, 50 grand that I could have made because the market was really nice. The first trade that I took on Amazon, the reason why Amazon became kind of came in my watch list was Amazon was kind of trending nicely. Look at all these setups. Everything started moving as soon as the market opened. Everything started moving towards the downside. Spies pushing, QQQs are pushing, Apple's going. But none of the trades have given me an entry. So I'm like kind of sitting there. I'm like, man, all right, let's see if any trades kind of set up for me to take. Because SPY QQQs are moving down. So I'm like, initially I was watching Meta. I was like, I'll do Meta towards the upside, but Meta stop loss was insanely wide towards upside. So I'm like, nah, don't worry about it. But that trade never gave an entry. So this became the watch list, Amazon. And the first thing that I always check before I take the first thing that I always check before I take my first trade is, has it broken below the pre-market low? All right. So when I'm trading, I'm watching Amazon. And if anybody have any questions, man, please guys ask the questions straight away in the chat, like straight away. All right. So I'm in the flow and I can answer them. All right. So Amazon, this is what I'm watching. As soon as I zoomed out a little bit, I'm like, okay, are we below pre-market low? As soon as I'm like, oh, we're below pre-market low. Not only just below pre-market low, we're below yesterday's low as well. Look at this. So this became, oh my God, this might be nice. And then this pullback went back and retested what? Yesterday's low. Do you see what I see? And now I'm like, oh my God, this could be nice. And also in the pre-market video that I made, I mentioned that there's a trend line. Look at this. This trend line, 1, 2, 3, 4, 5. And it kind of broke in the pre-market. Sweet. We can't do anything about it. But there's a reasons, multiple reasons for us to jump into a trade. The first reason being we broke below the trend line, which was setting up nicely. Second, we broke below the pre-market low, yesterday's low, went back and retested the critical level, and now has given me a decent entry. And also on the green candle, we have left less volume than this red candle. So I'm like looking for entry now. Does that make sense to everybody? I'm looking for entry. I'm like, sweet, what's the risk? For me, the first reward, and especially when we're sitting that close to especially when we're sitting that close to low of the day, my low of the day is not the target. If this candle was sitting somewhere here for my entry, and as I said, I look for containment of the candle. If I'm like looking for, let's say if this candle was this little, then probably the first target would have been low of the day, right? Now, because it's already very close to low of the day, now first profit target is the next yellow line. Where does the yellow line comes from? The hourly levels, right? And the levels are impeccable. They just work. All right. So I'm watching this. I'm like, let's see what's the risk. And this is the risk for me. The reward, this kind of like 1 to 1, roughly, you can easily say. And I kind of go with my visuals. If visually I can see it's a one on one, sweet. If visually it doesn't look like 1 on 1, then I just ignore. But let's see what was the risk. This is the risk. This is the reward. Pretty much I'm risking 50 cents to potentially just make 50 or 55 cents. So the risk reward makes sense because my um your if your win rate is more than 50%, even if you take 1 to 1 risk to reward trades, you will still be profitable. Just think about it. So 1 to 1, no stress. I'll take this trade. And did the did we ignore the fact that volume is higher than the previous candle? Now the volume's quite low, and volume's lower than the previous. Yeah. No, volume is not a concern, not at all. I kind of the big reason why this trade was I wanted to take this trade was one big confirmation, which is yesterday's low has broken and we went back and retested. Now that's telling me now think about it as a psychology point of view that um how many people have would have had these stop losses? People who would have, let's say, went long at the high at the close towards the market yesterday, or they were kind of probably in the pre-market went long because of this trend line. All these people are like, all right, if it breaks below, and with this swing traders, man, people are very, very biased towards the upside. People, especially people who trade shares, they're biased towards the upside. They just want to trade the upside. They don't want to trade the downside. Right? That's why you see people complain about crypto all the time. Oh, crypto is falling, crypto is falling. But in reality, you can make money when stuff is falling as well. But people are biased just towards the upside, right? They get happy when the stocks push up or crypto pushes up. Same thing. Stop losses, usually all these people have stop losses below yesterday's low of the day. And we broke below the stop loss. And now all these people who like people like me, you know what we're doing? We're sitting there to see if such a critical level breaks and comes back retest. That's the whole pretty much the concept here. Now, taking a trade is super simple. Now, this is where a lot of people make mistakes, and especially, even in case you students, you guys make mistakes where the greed kicks in. We know where we're gonna get out, and the greed kicks in. You're like, oh, I'm only up 8%. I'm only up 5%. Let me just wait for another 2 minutes. Maybe next level will hit. But these, bro, just for the sake of respect for these critical levels, just for the sake that you say, oh, I respect you, you gotta start taking profit. Doesn't matter because at the end of the day, you know what you're trading? This, please don't ever forget this. Keep your main thing the main thing. That's the main thing, right? The main thing here is you're trading charts. Yes, you are trading options, but you're trading charts. Yo, does it make sense? Think about if the charts are not there, would you be able to trade options? No. So charts is the main thing. So based on the charts, if it tells you get the F out, bro, you need to get the F out. As simple. Right, be it 5%, 10%. And how do we get out? So imagine if I did 10 contracts, how many am I taking off at the first critical level? Half. Yes, exactly. So I take half off, which is 5 contracts off. Where's my stop loss for the other half? And this is called negative risk management. Where's the stop loss? Doesn't matter how much I'm up. I think I made about what was it? 10% or 12%. As soon as it hit this point, I was up 12%. And negative risk management says the remainder of the contracts that I have, stop loss is break even. So my entry, let's say if it's zero point 0.9, I got out at a dollar. Stop loss is break even on the option contracts. If it bounces, goes hits break even, I'm jumping out. There's no doubt about it. And what happened next candle? We kind of held sweet, everything looked all right, but the next candle we this little pullback that we had at this stage, I was probably up like 15%, but never got out because my next profit target is this 183.4-ish level actually hit, but this hit the break even, so I jumped out. But this was the first trade. And I even said in the chat, remember the meme that I sent this morning? The first trade of the day, I am a like a little scared cat. But as soon as my first trade is green, man, I turn into a lion straight away. Because it has happened to me in the past so many times. Also, guys, please let me know. Type in the chat. How many people here have noticed that when you take your first trade green on the day, you walk away green on the day? And when your first trade is red, you walk away red. Anybody? Send me in the chat. He said, "Stop talking to me." He like, "Stop talking to me." Right. And this is just one of those things I have seen so many times happen um to day traders, especially me, where if I take my first trade green, it's just I go in a different mindset towards trading for the rest of the day. And that's what I want to always bank on and actually bet on. All right. That was the first trade, Amazon, nothing really fancy, but first trade. And then goes Tesla. Now, as soon as I realized I'm able to see the market clearly, now as soon as it jumped out of Amazon, next trade became Tesla. Why? Stocks, bro. Look at this. This is Tesla. Yesterday, choppy, whatever. Today, we tried to break the pre-market high, couldn't, came down. The trend is nice. Can you visually tell that the trend is weak? That's a question. Can you visually tell the trend is weak? Just like if you have to look at the trend and you're like, yeah, the trend's weak. It looks like it's pushing towards the downside. Yeah. So now where's the entry? Are we jumping in just in the middle of anywhere? No. Where's the entry? Let me know. Below this candle? Can we say if it breaks below this particular candle, we can jump in? But would the risk to reward kind of make sense with the yellow line sitting right there? So that means if we are jumping in here, the risk will be this wide on the other side of the candle. The risk to reward makes sense? No. So what are we doing? Like, no problem. Let's see what happens. And then we have this. The pullback went and touched this 8 EMA, still weak. And how does the trend go? So if you see this, what do you see? You know what I see? I see, okay, this is the highs. This made lower highs. And this maybe another lower highs. But definitely this is the lows. Um, this is the first lows and this is the lower lows. Okay, this is how the trend works. Lower highs and lower lows, right? And this is maybe lower high, right? And now what am I watching? A pullback has happened right here. This is roughly where we at. And I want to catch the move towards the downside. And this was, yo, this went, and I was, while I was back, doing my journaling, this trade went from 260 to 250. It was a $10 freaking move. It was such a nice move, and this trade was 100% trade. And now, where am I jumping in? The break below this particular candle. Stop loss on the other side. Risk reward based on just like low of the day. Makes sense to me. It touched low of the day. What are we taking off? The first position size. Say if I jumped in 20 contracts right here, the first trade of the day I took was green. Now I'm like going up on the bell curve, right? A little bit more. So if I jumped in 20 contracts here, I'm taking 10 off, right? Stop loss at the break even of the moment where I entered the option price. Let's see where it goes. We kind of went down straight away, and this is where the news was coming out as well, 9:45. So I was like, man, let's see. We were waiting, and as soon as the news dropped, nine. This is the candle we actually jumped in. So we were kind of waiting for the PMI numbers here. Then we went down. Now before 10 o'clock, I want to just take as much as market gives me because we had 10 o'clock. We had news as well. We had Joel data coming out 10. Yeah, job numbers coming out, and this trade started paying. Now, where's the next profit target? 255.9. And please, please, please mark my words. The only time you're gonna wreck this whole system up, the system works. The only time you're gonna wreck this whole system up when you start using your brain. And it, I know it sounds funny, but in reality, the moment you start using your brain, you're gonna start overthinking. The moment you start overthinking, you're gonna jump out early because every little pullback while you're sitting in a trade, every little pullback looks like, oh, market makers out there to get me. But in reality, bro, the trend is weak. Oh, I don't want to give back my profits. Guess what? That's not how you get rich. Oh, nobody goes broke taking profits, but nobody gets rich taking small profits. So you gotta let your runners run. What's the risk at the end of the day? As a day trader, that's what we look at. What's the risk? The risk is pretty much you already took some profits off. The risk is zero. Why? We are break even with the runners. We don't lose any money from our pocket. But the only problem that gonna happen with break even risk is when you start looking at your unrealized gains. You know why? Let's say you're on unrealized gains, you're up 500, and saying that I will jump out at break even, that means you're happy to throw this down. Hey, this is the risk. But unrealized money is not your money. Not yet. Up until it's realized, it's not yours. So how can you avoid actually letting unrealized money get to your brain? Yeah, hey, let me know. What do you think? What's a one way we can actually avoid letting the unrealized gains get to your brain in the real time while the market is open? Turn off P&L. Don't even look at it. Don't even worry about it. Just trade the chart. Exactly. Stop trading the P&L. Right? And now what are we doing? Sitting there, see if the next level hits. We'll take another few contracts off. Boom. What are we doing? Hey, these levels are impeccable. The next level hit. What are we doing? Taking, if I have 10 contracts still, so if I jumped in 20, got out 10, I'm getting another five, right? So I have another five contracts left, and the stop losses still break even, and the stock's pushing, the volume's going up, the trend's nice. We have made this move. This is where we entered. We have made this move towards the downside. The whole system's working, right? And taking a chill pill, relaxing. No entries yet, nothing. We didn't, I actually put, to be honest, I didn't add anything to this particular trade. This was the only one time entry, and that was pretty much it. I didn't add any to the trade because I'll show you why I didn't. So the next candle is 10 o'clock. What do we do as soon as, based on my system, man? I don't know if it's the first time you're watching this video. Um, so I use 2 minute chart from 9:30 to 10 Eastern time. I use 5 minute chart for 10 to 11 Eastern time, and then I use 10-minute chart after that for the rest of the day. So now 10 o'clock is about to hit. I'm about to jump on the 5-minute time. Boom. In a 5-minute time frame. Right. And 10 o'clock about to get hit. Look at this. The moment 10 o'clock hit, because of the news, I had like a few contracts still left. Because of the news that was coming out, this started pushing towards the upside. When it started pushing towards the upside, I was like, man, whatever. I still have my runners. The stop loss is break even. No stress. But I didn't add just because of the news. I would have added below this particular candle. Definitely, you know why. I know why. I would have added if there was no news as soon as this particular candle low breaks. But the moment I hit this, what am I doing? I'm taking a little bit more off from my runners. Yeah. So I took another two off. I have last three that I had running, and that was it. And then I just like didn't even worry about it. It went down. I forgot I didn't even jump out of my trade somehow. Here I was just sitting there, and I'm like, yeah, whatever. This was very quick. This was actually very quick. This was like just a wick that happened. This move right here that you see, push down, this was just a wick. But all in all, this is where we entered. Check this out. Now, based on the risk to reward, let me know if this makes sense. Now, this is where we entered. The original risk was this, but we milked this much. Think about it. You're risking $1.20 to put to make, and you made $9 on this. And imagine you getting out here and telling yourself nobody goes broke taking profits. What? You see what I'm saying? That makes sense? Yo, to everybody, let me know yes or no. The system works. Yes. Stop overthinking. That's all I'll say. And the only time you're gonna make a mistake is when you overthink, pretty much. All right. Because I'll show you what happened with my Microsoft trade, and it'll kind of make more sense. All right, we took this Microsoft trade around um after 10 o'clock. So this is the 10 o'clock right here. Okay. And I'm watching, I was in Tesla, but I was also watching Microsoft because it looked like it was giving me a nice entry. Can you tell that this is a nice trend towards the downside? Yeah. It's a nice trend towards the downside. And what's happening? Giving me a pullback. The one thing why I didn't like this particular trade, but I still took it, I still took the trade because of just paying respect to the trend. The one reason why I didn't like this trade was this candle, comparatively to the previous red candle, had more volume on the screen candle. And volume is very subjective. If you ever like, man, what's the good volume? Now always compare this current candle volume the candle that just closed to the previous candle. So this candle closed. I was like, man, this is the only reason why I'm not, if I'm not going to take this trade, that'll be the only reason. But I got this small candle. I'm like, sweet. Hey, I got a small, tiny candle. No stress. Let me see where can it go. Hey, where would I jump in? My stop. This is my entry below this particular candle. Stop loss on the other side, right? Where's the first profit target? Now, would I do low of the day here or would I do the next level? Think about it. Because, only because, yo, just one reason, because it has still, if this PC we had, if this was somewhere around here, then probably it would have been next hourly level. Just because this candle has decent move towards, still decent move towards low of the day, especially knowing how Microsoft moves. We all know how Microsoft moves, yeah? It moves like super slow. It doesn't move nice, especially when you're in a trade. Bro, when you're not in a trade, oh my God, this is gonna make a move from like 450 to 420. But when you're in a trade, you're gonna make like a move of 50 cents. And that's just the nature of Microsoft. And I know it. And I don't try to fight it. I just accept it. I'm like, all right, sweet. And that same nature is with BA, Netflix for me. When I'm not in a mood, Netflix makes $100 move. When I'm in a move, it makes $3 move and then $6 pullback. That's why I don't trade Netflix. And that's pretty much the only mistake I made here. The one mistake I made here. My first profit target became low of the day. This trade worked. I made about 7, 8% returns. Nothing huge. But the mistake that I made here on this particular trade was my risk to reward. I should not have taken this trade because it's potentially just like low of the day is here and a stop loss is here. I'm risking about $1 to make 80 cents. In the real time when this was happening, probably I was too much into just like maybe coming back from knowing that Tesla worked, also knowing that okay, previous trade worked, and I didn't do big position size. I should have just avoided this trade. The reason this is one thing that I even ask myself because when I'm journaling, I ask myself three questions. One, why did I enter? Second, why did I exit? And third one is what would I do better next time? And when I wrote down what would I do better next time, it kind of gave me one simple answer. What would I do better next time? Why take a trade which is not your A plus setup? Why? Just for the sake of taking a trade? Just because I want to take a trade, that's why. Is it a good enough reason for you to jump into a trade? Just because you want to take a trade? And that's one thing that I wrote. One thing that I wrote for myself that what would I do better next time? Don't worry about it. If the trade's not making sense, stop trying to make sense. And I tried to make sense of the trade here while the trade was not actually making sense. But it worked. Sweet. But I just got lucky. That's what it was. It went, hit low of the day, kind of took some profits, went back, hit the break even, jumped out. Sweet. There was like a quick scalp type trade. So to me, this is the trade that kind of gets a maybe the Tesla trade was 5 out of 5. This was probably a 1 out of 5. And just keeping it real. Right. So even I've been trading for a long time. If you ever get emotions into your trading, man, emotions sweet, they're there. But when you journal your trade, man, make sure you write it down. Just because it's a green trade, that doesn't mean it's a good trade, right? Because any money that you make without being disciplined, it's eventually gonna go back to the market. So you may as well just try to learn from that one trade. So next time you're super careful. Sweet. And the last trade was QQQs. And I jumped out of the call. I jumped out of the call and I was like, I was having my coffee because my missus brought my coffee. I'm sure you guys know, who won the voice. I was still drinking my coffee and we were like kind of laughing. And I came to my office just because I wanted to journal my trade so I could do this trade recap webinar with you guys. But then I saw QQQs setting up really, really nice. And this was about not yet, not yet, not yet. Roughly around somewhere, not even yet. Um, Somewhere here. This is when I came to my office and I looked. I'm like, oh my God, this looks really, really clean. Do you see what I see? Hey, Casey, do you see what I see right now? And I'm like, I was looking at it while the candle was about to close. I was so much into this chart. I'm looking at it. I turned on my broker really quick. I'm turning my broker on. I'm like, this looks good. I have to take this trade. And while I was so stuck in this whole thing, just watching the price action, while I was just stuck in this thing, I forgot to even pay attention to the volume. Check out the volume on the red candles. Super less. The green candle, a lot of volume. Do you see? Do you see what I see now? Does it look like all of a sudden this trade was looking like an A plus setup? Just if you look at this, it looked like A plus setup. But as soon as you look at the volume, it kind of goes, oh fuck. Doesn't look like that A plus setup. Yeah. And when I was like, to be honest, in the real time, I didn't pay attention to my the volume. I was just paying attention to this. I'm like, oh my God, this looks so good. And I was more paying attention to turning my broker on, having two-factor authorization, just like waiting for the code to come so I can put the code in and actually trade. Um, while everything loaded up, my QQQ's contract loaded up, and next candle happened. I jumped in. The moment I jumped in, that's when I paid attention to the volume. I'm like, oh my God. Now, because I have three green trades on the day so far, yeah, three green trades, and I did some decent position size, yo. I had about 50 contracts of this QQQs. And that's when I'm like, okay. I looked at the volume. I'm like, even though this worked for me a little bit, man, I jumped out of 30 contracts. I'm like, no, this is not it. I have to jump out. I have to do it. And which goes to show, which is another point which I wanted to break down was if you made a mistake, sometimes we all make mistakes where we jump in a little bit bigger position size than we intended to. I'm sure you have made this mistake in the past. Yeah. You wanted to jump in two contracts, but you accidentally jumped in 20. Or you wanted to jump in five contracts, you accidentally jumped in 15. Um, please, if it was not meant to be, please fix it straight away. Don't wait for the worst thing to happen before you fix it. Does that make sense? All right. If you accidentally jumped at more position size, or if you didn't pay attention to something and then you're looking at the stuff, please, please, please take some, um, take some, take some off just for your sake of mind. And that's what I did on this KQQ trade. And that's when I'm like, okay, this is 11 o'clock hit. Let me jump on a 10-minute chart. And it worked beautifully. Yo, it worked beautifully. It went down, like straight down. And I'm like, my 20 contracts paid heavy. These contracts went from like 1.4 to 1.40, 1.41. My entry point to like $2.10, $2.20, roughly around there. This is like, we're moving like 50% trade. It's a 50% quick mover, right? It worked. Beautiful. Made about 1500 bucks from it. But all in all, this trade was decent, good, but just because of the volume on that particular previous chart that I showed you was the reason why I jumped out. Otherwise, hey, if I would have stayed in the whole position, I would have caught this whole move. I would have made a lot more money. But I'm happy that I jumped out and actually followed my plan because my plan says if you make a mistake and you realize that mistake in the real time, there's no point journaling a mistake down. Why? Why you like, oh, I made a mistake and you're now journaling? If you realize the mistake in the real time, why don't you just fix the mistake now? Why wait for the worst thing to happen and then fix it later? Does it make sense? Oh, I made a mistake and now you're journaling. Oh, I made a mistake. I should be careful next time. No, you made a mistake and now you're able to realize in the real time and the market is open. Why wouldn't you fix it straight away? It's all fixed. Sweet, no problem. And I called it a day. Done. I'm like, okay, I'm out. And this particular low of the day was my first profit taken. Second was around this point, and that was pretty much it. And next, I actually was not in this candle. I was fully out, just because I didn't have enough position. I had 20 contracts running or something. Jumped out 10, and I jumped out another 10. I'm like, I'm done because of just like not paying attention to the volume. Was kind of like upset at myself, maybe. But yes, that was my trading. Was it controlled? Yes. Would I do anything different? Probably I would have ignored that Microsoft trade and otherwise everything was good. Make sense? Now, how do I know that I should be taking profits at low of the day and not just the next hourly level low of the day? Because from my entry to the low of the day was quite further away. So first profit taken, if it's quite further away, is low of the day, always. And the next, because that's the most recently when we saw buys come in. And buys are the one that push the price up. So this is where the buys came in most recently. And they pushed the price. When the price was dropping, buys came in around this 478.5 area and they made the price bounce all the way up to 481. So clearly buys are strong. Yeah. So why wouldn't you pay attention to that um, if you already are up decent? So I jumped out a little bit here, no stress. The moment the next this particular candle, it went down really quick. It broke straight away. Didn't even pay attention to it like all. I'm like, oh my God, 478, sweet. Let me jump out. And this was a nice move, man. This is like $1.50 move, $2 move. Right? Anybody have any questions about my trades? Yo, let me know. Pretty sweet. Um, pretty sweet. No questions. Sweet, guys. These were the trades made by 5 grand. Um, so yeah, that was pretty much it. Mr. Conrad, what's up, bro? Just type in the chat. No stress. or yeah, type in the chat. Maybe way more easier because I'm gonna put this video up on YouTube. You see, that's why it's set up with contain candle were candle that broke. Um, of course, I always kind of pay attention to containment candles. And there's so much more to the system. All my KCU students know that there's so much more to the system, like which contracts to choose, how to actually manage emotions, entries, um, stop losses. There's so much more to the system, but you can say this. Um, was there any news at 11? Because I only pay attention to certain news, man. Like Feds to me, Fed speaking, like anybody other than J. Paul, Feds does like they're important, but they're not that important to me. And if the Feds are speaking at 11, anybody other than J. Paul, 11, the market's not gonna start making a movement straight away. If it's J. Paul, bro, he can come in and he can be like, "Good morning," and the market just like, "Oh, he said the good morning in a bad way," and the market reacts straight away. But if anybody else, nobody really pays attention. You see, so if it's J. Paul, I pay attention more. But if it's anybody else, I'm like, they're gonna take like 10, 15 minutes doing all their crap. Who cares? um, yeah. Mostly in the pre-market video that I break down early morning, I'm gonna start telling you guys which news are more important that can move the price. I already do that, but I'll start being a little bit more in detail. Usually, just the hack that you can use on TradingView is if it says these three, fully all three, it's important. It's super important. All right. The all threes you should always pay attention to. If it's like it usually tells low, medium, but if it's like high importance, that's something that you don't want to play around with too much. That means it can influence the price too much. Like, look at this. J. Paul speaking yesterday. What was it? It was high importance. That's like the one that you're always going to pay attention to. All right. If we get a pullback after a new low of the day with a low volume, should we still consider that? Yes, 100%. 100%. Go take a trade. If there's another pullback happening here, sweet, go for it. Um, Today's move is mainly with the news of Iran launches over this. Um, bro, I don't. To be honest, man, I don't watch the news. I don't trade the news. I've seen the market go up on a bad news. I've seen the market go down on a good news. Clearly, it's not the news that moves the market. It's the price action and your understanding of levels, trends, and patience candles. Once you know all these three, man, it becomes simple and easier. Right? And that's pretty much it. Nah, no problem. Prabhav, Mr. Gogna, I got you, man. I'll start breaking down more about which news can actually move the price in the pre-market videos. How many contracts you increase on daily from Monday to Wednesday? It's not about contracts, man. It's more about my confidence increasing. Let's say if I have Monday, which was yesterday, I had a little red day. Today I was kind of be a little bit more careful for the first trade. I was super careful actually, not a little bit, super careful. As soon as I had my first trade in, I'm like, sweet, let me see. The confidence is stacking. Um, it's about, let's say if I'm going towards Wednesday and Thursday and I have Monday, Tuesday green, I can, bro, this might gonna sound like a lot, but I promise you it's not. On a day when things are working for me, let's say I'm taking Spire trade in the middle of the day and things are working for me, I can do up to 1,000 contracts on Spire. No problem. I can take the position size up to not straight away. I can take 100 contracts, then another 100, then another 50, another 100. Keep adding to my trade over and over and over again. My position size can sometimes go to 1,000 contracts. Now, is that too much? Probably. Um, but am I just doing it out of emotions? No, I'm doing it out of the system because my system says do more size. And I'm sure if you're in KCU, you know what I'm talking about. You can keep rolling your contracts. You can keep adding more when the system works. When system's working, keep going heavy and heavy and heavy. Why not? Because you don't get rich from small profits. You get rich from bigger moves, right? And guys, was my stuff. All right, we should start doing this every day, man. Hey, who's gonna heal? Um, Out of you guys, who's gonna keep me accountable every day? As soon as my trading finishes, just tag me. Hey, we're still waiting for the trade recap. Be it a green day, be it a red day. I should start doing every day. I like it. I like talking to you guys. I like talking to you guys. All right. All right. So if you're watching this on YouTube, you should subscribe so you don't miss out on any of this stuff. And guys, you should go and like this YouTube video as well when it's up. It helps with the algorithm. All right. All right, guys, I'm out of here. You guys have fun. And please subscribe to the channel. Yo, I'm watching you. All right. Go take some notes. Goodbye.